In Nigeria, especially in Lagos, the commute to and from work is sometimes 3.5 hours, sometimes 4 hours. Um, and this is time that is lost in terms of productivity. This is time that when people get to work in the morning after a 2 hour journey to come in, the first 1 hour they have to rest and recover, and they are tired. Then they sometimes will have a nap. Now, for those employees who now do not have to leave home at all, they gain all these hours as available hours to them. But because most of them are conscientious, most of them are hardworking, most of them are driven, they don't take those hours as private hours. They actually start working. We're finding some of our staff and some of our respondents starting work at 7 a.m. because they are used to waking up at 5 a.m. to go to work. So by 7 a.m., they are fully awake, they have had breakfast or tea or whatever, and they're engaged. And they're working sometimes till 9 p.m., but taking breaks in the middle. So um, for us, one of the things that we are seeing clearly is that productivity is improved, and the people that are working remotely are actually happier at it. They are able to take breaks, they're able to go off if they need to attend to their children, if they need to sort of go and pick the child from school that is nearby, childminder, all those kinds of things. Because employers are beginning to realize that if you give your employee the responsibility to do the job and you set him a time and he does it, it doesn't matter whether he's physically in the space where you can see him or not. By the way, he can actually come into the space, sit in the space, even be in front of a computer or be playing games and not actually doing anything. So, especially for multinationals, a lot of them, as you know, Twitter and co, they've said for life, employees that want to work from home can work from home. So I've talked of all the positives. What are the negatives? Bonding. That 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 corporate feel of the team coming together and having a cohesion is lost if everybody works from home. So companies have to take active steps to find a way to engender that bonding. People are doing it by having virtual parties. People are doing it by maybe once in a month coming to the office. I have some of my customers that every Friday they come and take a meeting room for 2 hours just to bond and talk and then go back and then they work from home. And I myself, my accountant, my lawyer, the people that are not front facing to the customers, we have provided them desks at home and Wi-Fi, and they just work from home and they're so much more productive. So on the whole, the balance is that it is positive, especially when you have motivated employees that are disciplined and have a target. They understand what they need to do and when they need to do it by. Both from the point of view of the employer, but also from the point of view of the employee who then has the flexibility to work at his pace. There's one big disadvantage in Nigeria: infrastructure. So if a lot of people work from home, you have to provide Wi-Fi, which is not that difficult because you can put data on people's phones or laptops or whatever. But power is the big thing. Because you have to have a generator, you have to be able to, and if you have 100 employees and you have to put diesel in their generators, not talk of maybe even buying them generators at home, the cost of that is much greater than bringing all of them to one central place and having just one generator, that you power. But on the whole, just to summarize, the trend is certainly gone remote, and we will see more of it happen. But we just need to balance the positives against the negative of not being able to be bonded in the same space.
Oh,
You're right. Inflation If you take the official statistics, it's about 13 to 14% and rising. Uh, Unofficially, people think it's over 20%. But whichever way it is, uh, it is significant. Margaret Thatcher, the British Prime Minister, said a long time ago that inflation is that thief in the night that comes to take your money while you are working hard. What she meant was this: every year, if you earn, let's say, 100 naira a month, and next year you earn 100 naira, you're basically going backwards. You're going backwards because if inflation is, let's say, 13%, your 100 naira in year one becomes 87 naira in year two. What that means is that it's still the same 100 naira, but it can only buy 87 naira worth of produce, because inflation, the same things you used to buy with the 100 naira will not be able to be bought because the prices have gone up. So that's the real effect, and that's why the employees are saying, I want more money, because to maintain the same standard of living, they need at least inflation to stay still. The employer understands this, or most employers understand this, but they don't have the money. There is no process. One of the things, there's that Yoruba proverb that if money leaves your home, if money leaves your house, you make no plans until it returns, to your house. Mm-hmm. So there's no process by which you square that cycle. So for employers, what you need to do is, one, show your employees what your capacity is. Explain to them that you understand what inflation is doing, but this is your capacity to respond to it. And then show them a plan. When we get this level of income, or when we increase our turnover to this figure, we will do X. Promise what you can deliver, setting a target. If you encourage the employees to say, look, if we find 20% more revenue, we will be able to increase your salary by 10% more. Then you energize them to go and help the company find the revenue. And when they find the revenue, you as a responsible employer must then deliver on your side of the bargain. But I have to tell you, I own more than a dozen companies. And an employer that promises that he's going to match inflation now is probably deceiving his employees. There's just no way to square that cycle of when you put your hand in your pocket, there is no money there. And until that money returns, you can't have any plans. It's just the unfortunate reality of it. What I have done in the past, after 2 years, when we have been able to sort of, make a significant improvement on our revenue, we've then gone back and said, well, we've been through the pain together. Now let's do something, to acknowledge that your living standards have gone down. But until that money comes back to the house, make no plans. This is a worldwide problem that there is no magic bullet solution to. One of the things that we're all faced with, especially at this time of the year, is that we're looking first at what are the expenses that I can strip out. Because one of the things about financial sustainability is that there are two sides to it. There is the side of money coming in, and there's the side of money going out. Now, both have to be managed. You have to try and find more money coming in, and you have to try and reduce the amount of money going out. The net is what sustains you. We talk about sustainability going forward. You hopefully have a buffer already built up, which is your profit on the work you used to do. So when you offer a customer this service for 100,000, maybe it costs you 80,000, and therefore there's a 20,000 profit. Now, you are hoping to try and push the customer to do maybe 105, but your expense is going up by 13%, so that your buffer will get squeezed, right? We get squeezed in the intervening period. But we know with life, we know even in religion, certainly in Islam, it says that after every hardship comes relief. So we believe that you will take that suffering, that pain initially, hoping, believing, and working towards the relief coming when you'll be able to reflate again. In the interim, if you're an employer or if you're a business that then says to customers, if you can't pay me this additional amount, I won't do the work, you might fail. Because there will be other people that will say, well, I'm just going to do it for the sake of relationship. They're not doing it because they are making a lot of profits. Sometimes they might not even make any profits, but they might do it to maintain their staff, because there's something called the work rhythm. And idleness, the more you don't do anything, the more it becomes difficult when work comes to get into the rhythm of it and actually work properly. So like in a glass company, when they fire the furnace, making the glass, and when the glass comes out at the other end, even if there is nobody to take it, they take the glass, break it up again, and put it back in. Because firing the furnace to start in the first place takes 6 months. So they can't afford to shut down. So the same thing is like with a company. Sometimes the group of people that you have, you can't afford, if you let them go, or they're not working because you are insisting that you must get a particular price before you do something, you might find that by the time you come back to it when things are reflated, the dynamics of the company, the work rhythm and whatever is lost. So this is a very difficult equation where most realistic companies, what they will do is say, look, let's reduce our margins. Let's find a way to keep going, because we are hoping that there will be light at the end of that tunnel. We will get through the period. Now, that's not to say that you can trade yourself to death. You have to be realistic and say, how long can we go for on this? And what do we have to do? You can't continue until one day you have to shut down. You have to be able to project ahead and say, look, what are we seeing in future? Is this going to be 6 months and then it will be over? Is it going to be 3 years? And if it is 3 years, can we sustain this for 3 years? How do we, get on? So we're constantly having to have that review. But the value proposition to the customer must be clear. Even when they don't pay it, you must explain to them and show them that this is the value they're getting, even though they're not paying for it. And then you hope that when things improve, they will compensate you for the fact that you were with them when things were tough. Whoa, this is a $1 million question. So there are a number of ways, none of which is perfect, but here's some of the things that we try to do. First, when you are setting your price, you set your price with an exchange rate in mind that is slightly forward facing. What I mean by that is, because we see the trend of what happens normally, when you're setting the price today, let us assume that today it is at 470. You know that this customer is going to take 60 days to pay. It may not be wise to set on the basis of 470 to the dollar. It may be wise to first assume a slightly forward rate in your price. So if you know that you have to spend $100, instead of 470, assume it is 480 to get a naira component for the bits of the work that you have to do. And then of course there's the naira bit. So that's a bit of forward, if you want to call it forward projection, of what you think the rate might be at the time that they will deliver the funds. That's one. Two, and we use this in construction quite a bit, is to say, I am putting a price of 100,000 for this job. 60% of this price is a foreign component item for which we have assumed a dollar rate of 70 or whatever it is that you have assumed. By agreement, both parties may agree to be paid partially in FX and in Naira, so long as both of them agree to it. Right? So I have mentioned three different ways, three different options on this FX matter. Beyond those three ways is that, especially for businesses that continually have FX requirements to fund their inputs, one of the things they must do is, as soon as they have any Naira inputs, they must look to buy FX. Because if they don't, what will happen is that they will end up looking at their Naira, and when the time comes and they need to do something in FX, that Naira will not cover it. Now, this is not, let me stress again, this is not FX speculation, i.e. keeping the money just to be looking at it in FX. It is saving your money in the currency that you're going to have to spend it in. So, as a business, you know that every year you have to pay a $5,000 subscription for some tools, some technical tools that you have to pay for, some software that you have to pay for in your tech space. If you get Naira today, it doesn't make sense for you to keep it in Naira and be looking at it when you know that in 3 months' time you have to pay a $5,000 technical bill. It is important that you start, accumulating your funding that is crucial to your business, as soon as you can. Because if you are to wait 3 months, what will happen is you don't know whether that Naira will cover it at that point in time.
Mm.
So those are the ways that I feel that we can deal with this. Sometimes you will tell your customer there's an FX component to this, and if it goes higher by 5 or 10%, we might need to revise this. Sometimes you might agree with the customer if they have FX to pay you some component in FX. In fact, to be totally transparent, you can ask them to pay directly to yourself, to your vendor,
okay,
so that there is no suggestion that, oh, you are just trying to get the money. We need this portion of it paid this way. Especially in construction, we see this a lot where you need to buy things from abroad to build a house. So you say, let us agree these sums. Send it directly to the lift manufacturer or to whatever it is, and then you only deal with the Naira component of it. If the customer is capable and amenable to that. So those are some of the ways that I think you can use to deal with this FX matter.
Yeah.
You go to a company like RentCap or your bankers and you say to them, I want to have a contract to buy $1,000 in 90 days time. And you agree a rate. They give you a rate, you agree a rate. Therefore, you know exactly how much Naira you are going to need in 90 days time to be able to acquire $1,000. Once you have that, then you can put that into your pricing to your customers, knowing that that exact Naira, once you deliver it, the person must give you the dollars. So it's called the forward FX contract. And the Nigerian bankers will do it, and then there are some specialists, international money transfer order companies that will also do. I think RentCap, Renaissance Capital, will also do that, but most banks will do a forward FX contract. I don't know anything about Bitcoins at all. Unfortunately, I'm old school. It's not, so when I say I don't know, it's not that I don't know technically what Bitcoins are. It is that I'm a traditionalist in the sense that I believe that money should be regulated by central bankers. So the reason, so a little bit of history about the history of money. We used to use cowrie shells and all sorts of mediums. Then at some point, we moved to what was called the gold standard, where you have a gold bar, you physically see the gold, and say, this is gold, I give you the gold, we know what the value of the gold is. When we move to paper money, if you take your naira or your dollar or whatever, the note says $100, but on the back it says, promise to pay. Promise to pay. That piece of paper is a promise that if you bring this $100 to the US Reserves Authority, you will get $100 worth of gold, because it is backed by a gold standard, right? Currencies are based on that. Whoever issued that currency, Central Bank of Nigeria, the Bank of England, whatever, they are standing as the guarantor for that money. They are known authorities that you know where they are at. You can go to them, you can relate to them, and when you place a tender, you get, it has to be honored. Now, I don't know that that is the case for Bitcoins. This business of things that I hear, that people are manufacturing the money, and we don't know if it is backed by the value that is being quoted. Makes me the traditionalist, where I go, look, Warren Buffett says, any business you don't understand well, don't invest in. And for me, your money is your business. it's part of the things you need to understand. It's part of the things you need to understand better. Yeah. So if I was to ever go into Bitcoins, first I would go and understand it sufficiently well, and understand not just how it is created, but how it is guaranteed. Because if one day somebody says, here's my Bitcoins, I want value for it, and I have no authority to go to, I only have somewhere in the cloud or some person sitting, or that is not a named human being, or that can suddenly declare himself bankrupt, then my Bitcoins might just be worthless. But a country, except Argentina recently, can't just declare itself. They will find money. It is a sovereign issue that they must back and support the currency that they have issued. So me personally, I'm not involved in Bitcoin. I've not touched it. I don't know enough about it. Okay. So when you go to business school or any type of environment where they're teaching about business, they say to you, you have to analyze your environment. And they give you all kinds of pastel, all kinds of variations of it. Every single bit of the environment in which you operate is a bit you have to be consciously thinking about. So, aside of what is happening in your industry, what is happening with your competitors, you have to be also thinking about what's happening in your environment. So, for example, if you sell luxury shoes and bags, and in your environment, people are getting poorer by the minute, you are having a shrinking population of people that can afford what you are selling. Just as a simple example, if in your environment there's political strife and insecurity and kidnapping and the likes, it will affect your business. It will affect your business because somebody that is your customer may be kidnapped before he pays you. Your key staff may be kidnapped, may be shot in the process of the kidnapping, and so on and so forth. There are so many different variables. So your the key is to be watchful of everything going on in your environment, and not just what, because you can be watchful about it and then be paralyzed with fear about, oh, all of these things may happen, so I shouldn't do anything. But that's not the point. It is to be watchful of those points and then say, if it happens, what will I do? It isn't enough to just analyze it and say, oh, there's kidnapping. Oh, yes. So if one of my key staff is kidnapped, can I get key man insurance? Can I, if every staff that works for me, there is somebody else that can cover for their role, for example. So the analysis is just one part of it, because it exposes you to all the things you need to be thinking about. But that's like your exam syllabus. Then you need to prepare your solutions to each of those issues as they are arising in your mind. So if we are going to have social and political issues, how is your company going to weather it? If FX is going to double, how am I going to deal with it? To the FX point. For example, just going back to that, what if instead of worrying about the naira, whatever, what if you started selling your services to people abroad who would then pay you in dollars?